Hola, people professionals, and thank you for tuning in to our webinar this evening. If you're joining for the first time, Karibu Sana, we're so glad you made it and you made it on time. Please let us know where you're tuning in from. If you're streaming in from YouTube, on the comments section, please let us know where you're tuning in from. If you're in Nairobi, let us know. If you're outside Nairobi, if you're outside the country, please let us know. Also, we're really curious to know what you do. If you're a payroll officer, if you're a HR manager, a founder, please on the comment section also let us know that as well. And if you're interacting with Elevate HR Africa, the brand, for the first time, allow me to quickly tell you a bit about who we are and what we do. We are a cloud-based HR platform that's tailored for the African market. We also provide HR services. So if you're looking for a payroll partner, if you're looking for an outsourcing partner or a HR consultancy firm, we are here. You found us. If you're a people professional and you're not part of our community of HR professionals, the community is hosted on Slack, just to be clear. Please join us as well. We have a very vibrant community, and the goal of the community is just professional development and networking for our members. Now, today is a very special day for us. We have panelists who are very well prepped and ready to take on the agenda of the day. I know the last time we had these guests on board, you guys said, bring them back again. And because you're good people, we listened to you. We've brought them here to help us go through today's topic, which is really I'm talking about what is taxable and what is not taxable, which is a conversation that we often have in the community. So we decided to just have a deeper conversation with it. So we're going to get into a session where we'll talk a little bit about that as well. And then towards the very end, we'll have a Q&A session. So if you have questions concerning this topic, please drop them on the comment section. I know some people are streaming in from YouTube, others are on LinkedIn. So we'll be able to get all the comment sections from the different places. I know some also follow us via social media pages, Instagram. So it's fine. We'll get, even on Slack, we'll get all the questions. And then towards the end, our panelists will get to tackle that. So without further ado, I know this is the moment that everybody has been waiting for. So allow me to introduce our moderator, who is going to be taking us through the session. She is a HR leader who has over 4 years of experience in the space. She is very passionate about people management, and she currently is the HR manager for Adenian Labs, which is an accelerator for tech startups. So Janet Madenge, karibu sana to the session.
Thank you very much, Pili, for that introduction. I'd want to welcome everyone for this session. I want also to welcome my panelists. I'm going to give them a chance to introduce themselves. That is Erica Gosse and James. I'm going to give them a chance to introduce themselves and give us one fun fact about their career journey that we do not know about. We will not escape the fun facts.
Good evening, everyone. It's good to be back here. My name is Eric Agose. Janet, again, fun fact, you bring it up again. So fun fact about me is I love my job. I love HR. And HR for me is fun. Dealing with people is fun for me, probably. That will be my fun fact for now.
Thank you, Eric. James? James, you're speaking on mute.
Right. James Sami, my name's the customer success lead at Elevate HR, and also the payroll analyst at Elevate HR. Fun fact about me, I think I love Excel because it all started with Excel, because most of the companies do with Excel, right?
Yes.
And then software, of course. So Elevate HR is now software, but the fun fact remains to be I am a fan of Excel. So
Oh,
Yeah.
that's interesting. So thank you, Eric and James. And on to the topic of the day, what is taxable and what is not taxable? I'm going to hand it over to Eric. What constitutes taxable income for employees in Kenya? And what are some of the key components that HR and employers should be aware of?
Thank you very much, Janet. What is taxable and what is not taxable?
Yes.
Basically, from a Kenyan context, we'll probably say everything is taxable. Let me
Yes, at
start.
this moment, everything is taxable.
Yeah, everything is like taxable, but for the sake of employment, basically the income tax says that every payment in terms of salary, bonuses, wages that an employer pays to an employee, whether cash or non-cash, constitutes a taxable income. So majority of most benefits that employees get from employment that include salaries, wages, bonuses, allowances, fringe benefit tax,
Yes.
majorly all those come through commissions and bonuses that you are paid. All those constitute mostly taxable income. So if you're paying any amount to an employee, please confirm that that should be considered for tax because majority of them are. Yeah.
Okay, thank you very much, Eric. Over to you, James. What are some of the types of employee benefits that are taxable by the Kenya Revenue Authority?
Yeah, the term benefit is broad. It's
Yes.
composed of we have the taxable and we also have non-taxable benefits. So I'll just deal with the taxable benefits as per the question. Thank you for that question. So yeah, I just go down by one. So we can start with that is what we normally call the housing allowance, which most of the employees who are in the parastatals, in the government entities, but you might not find it in the private sectors. So yeah, that one is taxable. You have things to do with company cars. So if an employee is provided a car by the company, by the employer, sorry, and then yeah, that one is also taxable. You also have things to do with loans that are issued by the employer to an employee, but at a low interest rate. So again, that is also taxable. We have other benefits, so many benefits. So we can just list just a number of them, including like if an employer pays you pays school fees for your kids, you should not exempt that. That one is also taxable. So you can have a list of them. So things to do with utilities paid by the employer, mostly for the directors, the founders, because that is also money, that's also income to you as an employee. So it is also taxable. For the case of directors, then it has to be subjected to, it's a benefit, yes, it has to be subjected to what you call the withholding tax for the case of co-founders and directors. Then things to do with holidays, vacations, if you benefit on that, again, gifts and awards, a lot. It's quite a number of them. So any income or rather any amount that is not part of your basic amount is a benefit, and therefore it has to be taxed. Talk of overtimes; those are also benefits. They are also taxed at the end of it. Yeah.
And is there an existing tax exempt limit for this?
Um, Yeah, for the case of, for instance, for the case of benefits like pensions, you see an employer might be contributing like NSSF for you on your behalf. So you find that you are exempted on that contribution that the employer pays on your behalf for the pension. So like the NSSF. But to a limit, to a cap, it's capped at 20,000. So if you as employee and also the employer is contributing on your behalf, like the NSSF thing, therefore it's exempted from taxation. So that's why it is normally considered as a allowable deduction before you arrive at what is taxed. And therefore there is a cap at that. There is a cap. So there are quite a number of limits that employees enjoy when it comes to what is allowable, things to do with mortgages and their mortgages and pensions.
Okay, thank you very much for that response. On fringe benefits, Eric, how does the KRA categorize fringe benefits, and what should employers consider when providing these benefits to their employees?
Thank you for that, Janet. And James has alluded to some of them. A fringe
Yes.
benefit is basically a benefit that the employer provides to an employee, which cannot is not really cash is not really a cash benefit, but
Mm,
sometimes it's a benefit that is given at, for example, a loan. An
yes.
employer can give an employee a loan which is lower than the market rate. That is considered a fringe benefit tax. Or when an employer provides some of these like car benefits and mortgage benefits, those are
Mm-hmm.
considered as fringe benefit tax from a KRA perspective. Although the most common fringe benefit tax that most people talk about will be the lower interest rate loans. So, for
Yes.
example, if your employer decides to give you a loan that is below the market rate. Now, below market rate means CBK on a quarterly basis, not even CBK. KRA on a quarterly basis gives a market rate. Right now, I
Mm-hmm.
think the market rate is currently at 13%. 13% or thereabout. So if an employer decides to give you a loan that is less than 13% interest rate, KRA decides and say that is a benefit to you. So what that means is the employer, and as per the acting from 2008 thereabout, the law said that the employer is the one who's going to be catering for the fringe benefit tax. So if the employer decides to give you a loan at a lower interest rate from what KRA has deemed as a market rate,
Mm-hmm.
then there's the difference between the rate of the employer and that which KRA has prescribed. The employer will pay a tax on that differential. So that is
Mm-hmm.
basically one of the most common fringe benefit taxes. Others probably becomes now the car benefit and the house benefit that also forms part of fringe benefit tax. Thank you, Janet.
Thank you. And what are some of the rules around the company cars, the housing, and all that?
Yep. For there are some of us who are lucky, probably. Okay, I'm not yet there, but although I'm looking forward to. For some of us who are lucky to be provided with cars, KRA requires that this car is taxed on the employee 2% of the purchase value. So, for example, let me give an example that because I see my employer has a lot of Toyota Fortuners. So my employer decides to buy a Toyota Fortuner and gives me to use, and the employer buys it zero mileage at 8 million, for example. So 2% of 8 million is taxable on my salary. You understand? So that is taxable. If my employer decides and say, you know what, Eric, you're a very good employee and you are going to furnish your house, Pale
Mm-hmm.
Kilimani. So they buy me those nice fridge, 200,000. They buy me a slim Sony Bravia of 300,000 and some nice coaches there of probably 500,000. And then they do that total and they say the furniture in my house is probably around value of 800,000. Now, the law requires that 1% of this is taxable on the employee. You understand? So that is
Yes.
that is furniture bit of it. If it is a house,
Mm-hmm.
KRA says that if the employer decides to give me a house, then I
Mm-hmm.
am supposed to be taxed either 15% of my total income. I take 15% of my total income, and if that amount that the employer is paying as rent is equal to or less than 15%, I do 15%. But if that amount, the rent that my employer pays is more than 15% of my income, I use the actual amount of rent paid and it's subject to tax. So there are some of the things that the fringe benefit tax and how they apply in terms of taxes. But let me say that in the event that some of us who work for American and those nice employers that I wish to work for one of these days,
Me and
and
I
they
both.
exactly, and they give you a the net salary. So you go negotiate a contract, and you're like, you know what, guys, me, I'm going. You to pay me a net of 3,000 USD or
Mm-hmm.
2,000 USD, for example, and it's a net. Your contract is net. Then the KRA says all these other benefits that you're supposed to be at the taxes and everything, your employer needs to gross them up. And then now when they gross them up, that's when they pay. Are we together?
Yes.
We are fine?
Yes, we are.
Thank you,
So we
Janice.
have a question from the chat box. They are asking, is the 2% car purchase value taxed monthly or once?
Monthly.
It's a monthly payment.
Yes, it's a monthly payment.
Okay, thank you very much, Eric. So, also, I would also want to follow up that with some of the employee benefits are generally not taxable. So, what are some of the common exemptions or tax relief employers and employees can take advantage of?
Tax relief. And I've seen
Yes.
one actually. I've seen a few being proposed in the Finance Act of 2024. So employers need to watch out on Finance Act of 2024. There are few amendments that are coming in that probably as the bill is being discussed, we may need to look into. But currently, as we speak, number one is insurance, of course. Life insurance policy attract a 15% tax relief. This one is not a benefit, but it's applicable. Employee with special needs, PWDs, we call them people with living with disabilities.
Yes.
They are entitled to a tax relief of up to 150,000 of their income. The first 150,000 of their income for anybody with a PWD is tax exempt, and they have to provide a document from KRA, so that
Yeah.
someone does not decide and say, you know what, I think I'm disabled in another way, but I don't have something to prove. So they have to get us a KRA tax exempt certificate so that they're
Yes.
eligible for that. Of course, pension is tax relievable up to a maximum of 20,000 per month. I've seen the new bill is proposing to take that money to 30,000. So that's an interesting place to watch for employers. Another thing that is that has a tax relief is NHIF, which is soon being repealed to SHIF. But currently, as from January 2022, NHIF has a 15% relief. There was a proposal in AHL, but I don't know, it didn't take effect. I don't know if it has taken effect. AHL had a relief, but I've not seen it take effect.
No.
But it had
Maybe to speak on that.
there
Yes.
was
Yes, James.
AHL has not yet.
there was a proposal to have AHL have a relief, but
The
that one
housing
has
levy. Yeah.
The housing
the
levy.
housing levy, affordable housing, but it has not taken effect. So basically, it's pension, NSSF, NHIF considers as a tax. Then of course PWD, and then of course what have I not mentioned? The other one that I've talked about. I think those ones, basically those ones.
Okay, thank you. And how can employees go about claiming this tax relief, and what documentation would they need? I think you've mentioned about the disabled, they need a certain documentation. What other documentation would other employees need who probably are not disabled when they want to apply for a tax relief?
Okay,
Oh,
thank you for that. Is it James or it's myself?
James seems yes, James.
James
I
has a
can.
better answer.
Yes, he seems
Let
to
me just
be.
proceed with that. I think
Okay.
these are compliance matter where
Yes.
it's a role for the employer now to ensure that you see this is a deduction from the salaries of employees. It's now the role, or rather the responsibility of the employer, to ensure that employees enjoy the relief on housing levy, on SHIF, and also any allowable deduction. Now that they are benefiting on things to do with the NSSF, as we've talked, if the employer is contributing NSSF on behalf of the employee, then the employer has to ensure that it's an allowable deduction. When it comes to NHIF reliefs and or other insurance reliefs, 50% of that. So you being the employer, you should ensure that you compute your payroll accurately to ensure that these employee benefits from that 50%, but
Yeah.
capped at 5,000 per month. So it's the role of the employer. You don't need to apply for anything. So for you to benefit from
The
it.
role of
Yeah.
the employer.
Yes,
Yeah,
yes.
but to add, but also to add on it is that, of course, from a tax planning perspective, it is the employee who is planning their tax life. So it means if I meet, let me not mention an insurance company lest I market them. So if I meet insurance company X, and
Yes.
and and their sales agents are usually very aggressive, very passionate, the way I am passionate. So, an agent of company X comes and sells you a life insurance policy. It is your responsibility as an employee to tell the agent to give you a tax exempt certificate.
Yeah.
Now, AKI, the authority for insurance company, they usually have those certificates, and those certificates are the ones that you're supposed to give to your employer or your payroll person. In this case, if you're using Elevate HR, you give it to James and Pili and the team, so that now the tax relief can be implemented in payroll. I've also seen there are people who are there's a lot of push from the government about affordable housing, which is financed through Kenya Mortgage Refinancing Company. So, and I've seen a number of Kenyans, normal people, going for those loans an interest rate of 9.5% or 9%, depending on the bank. So, you can also, once you have this mortgage, you can also tell the employer that, you know what, I'm running a mortgage with whichever bank that you're taking it with. And it's a mortgage, it's considered as a mortgage. Mortgage is relievable every month to a tune of 25,000, isn't it?
Yeah.
So once you take a mortgage with the Kenya, whatever mortgage refinancing company with the bank, talk to your HR and tell them I'm servicing a mortgage loan with a certain bank. The bank will give you a mortgage relief certificate. Take it to James if you're running with the Elevate HR, and James will process the mortgage relief in your payroll. But in the event that the year has come to an end, right now we are filing taxes, we are filing returns, and you did not tell your HR to apply that relief on your payslip. Now the next way to claim is to file returns and claim from KRA and expect to be reimbursed that money. Underline expect to be reimbursed that money.
Yeah.
Okay, thank you very much, Eric. I think a bit on compliance, James. What are some of the common challenges that organizations face when trying to comply with tax laws, especially on the payroll?
Yeah, thank you for that question. I think some of these challenges that employers do face are things to do with the complex filing procedures. So people do fear KRA. I don't know why they do fear, but when it comes to the filing procedures, then sometimes they tend to be complex. Though those who are used to the processes, then it's easy. It's a very easy task to do. So that's one of the challenges. The other thing is the education, or rather awareness, creating awareness the to the payroll masters, or rather those who are involved in the processes. That's also another challenge, which creates cost, which adds more cost to the company. Other things are to do with the high tax rates. For instance, the implication, the addition of the housing levy. Look at that, like 1.5% of gross values, and it is not capped. So even if you are earning 800,000, so you 1.5% of that, the employer has to incur a match of that. So high tax rates. So I think that's also been other challenge. The other thing is the tax culture in Kenya. You can see it's never settled. I don't know why. In Kenya, it's always changing. Like for instance, in this July, we are going to have SHIF. Early this year, within a span of even 3 months, you find changes in the laws. So such kind of challenges, they do bring a lot of confusions when it comes to, yeah, in fact, those are the tax reforms. That is the best word to use. They bring a lot of confusion to employers, and yeah, that's the main challenge that employers do face when it comes to compliances. Maybe you've
And
covered.
how do you think we can mitigate these challenges aside from what we are doing now, which is more education to more of the HR professionals as well as finance? What are some of the ways you think we can mitigate these challenges?
I'll speak of two. The first one being we have relying on expertise, and these are people like Elevate HR. For instance, you need to look you as employers, you need to look for expertise for companies whom you can outsource the entire payroll function, and they will ensure that you are compliant because they are accountable for that, and they have personnel who are trained for that work. Their work is to ensure that you are compliant. So I think that is the best option. And then the other one is ensuring you follow the news from KRA and any other regulatory body. Like you need to be on toes. You need to be updated every now and then. Each and every month, you need to at least do reviews, do kind of trainings to your personnel who are involved. Send them to trainings for them to be ready for compliance, because in Kenya it is never settled.
Okay.
Yeah.
Thank you very much for that. Eric, allow me to take you a little bit back. I've received a question. Are gifts tasks in the example that you have given, that is in furnishing a home? If the furnishing that you are given by the employer was, say, a wedding gift, would that still attract tax?
Yeah, thank you for that. At the moment, if an employer gives you a gift as a wedding gift, it does not come through your payroll. I doubt if
Mm,
it's taxed. I've not interacted with a scenario where that is up for debate whether it is taxable or not. So that will not be taxed at the moment. I've not also not come across a guideline on tax for gifts at the moment. James, probably if you might have interacted with, you may
Yeah.
weigh in on that.
Yeah, it might be a correction, slight one, but again, it has
mhm,
to, you tackle it in two different ways. Number one, there are those gifts and awards that are taxable, and again, we have those which are not taxable to some limit. So the limit is not yet clear, but again, there is a, like they speak of small gifts. They speak of small gifts are not taxable; they are exempted. So
mhm.
it's not clear, but gifts and awards are taxable because it's a
Okay.
benefit. It's a benefit, yeah. It's a benefit.
All right. Thank you
Yeah.
very much. So before we proceed on a short break, Eric, what are some of the laws and that HR and finance professionals should be aware of as we approach this compliance month and make sure that we're able to file our tax returns on time? What are some of the laws that HR and finance professionals should be aware of? And how should companies also adapt to changes that have been effected along taxation and payroll?
Okay. Yeah, thank you for that. We are currently in a finance bill. Finance bill 2024 is up in the air. Everybody is discussing it.
Yes.
I've been perusing it to see what are the possible changes from an employee and an employer perspective, and a few things that I think probably may come in. There's a huge push, or there's a huge push to have SHIF come in 1st of July, so that employers should watch out on it. I'm not sure if the structures are in place already, but from a compliance perspective, SHIF might come into place in 1st of July. So watch
July,
out
yes.
on that. Of course, there is a push from Finance Act is going we may affect income tax, and income tax will affect employees. One of the things that I've seen is a proposal to have the pension part move from the current limit of 20,000 to 30,000. So that one too, employers should even employees should be aware of that. There's a proposal about having affordable housing and SHIF. What is the name? James has used that term right now.
Allowable, being allowable in that.
Allowable, exactly, allowable. There's a proposal in the Finance Act of 2024 to have SHIF and affordable housing allowable. Allowable, it means that when you're computing the taxable income of an employee, you remove SHIF, you remove affordable housing, you remove NSSF, then you arrive at the taxable income. This will have a good effect to employees, because it will now reduce the taxable income, so that now your taxable income is less and you pay less taxes. Of course, now those are majorly some of the recent most and perhaps the new changes that may come in. I've also seen somewhere to do with meal allowance. Currently, meal allowance is has a limit of I think
4,000.
36,000 per year that
Yeah.
is allowable for tax.
1,000 per
But
month,
then
yes.
that limit might go up from the proposal, I think, to something close to either 60 or 48,000, thereabout. I think it's 48,000. So those are some of the things that the employer should be looking out for. with the proposed changes in the Finance Act of 2024 and any other subsequent changes that may come with the employment. Thank you, Janet.
Thank you very much, James. Sorry, Eric. James, I have a question for you. For those receiving school fees benefits, how is this taxed from the employer or the employee, and at what rate?
Yeah, it's at the normal rates. It's part of the benefits before you arrive at the taxable amount. So it's the basic plus the school fees benefit, and then you arrive at the gross. So the school fees benefit, regardless of the amount. So it's not capped. It's not limited. The amount. It's the amount that you benefit. The employer now pays school fees for your kids. So that amount, it's a benefit. So it's taxable.
Benefit.
Yeah. So
Okay.
it's imputed before you arrive at gross. Yeah.
Thank you. Thank you. A question to you, Eric. When you said underline when you said underline except, does that mean that KRA will reimburse or won't reimburse? I think when you're going to claim for the reimbursements, will they reimburse or will they not reimburse?
Of course, the law is very clear that KRA will reimburse any amounts probably that were probably overpaid or claimed by Kenyans. It is a law. It is in the law. So you just need to ensure that once you file your returns, you put in the paperwork the way that KRA requests, and then the system automatically notifies you when you've requested for a reimbursement. And there's a process. There's a small process that will ask you. They are very KRA is very interactive nowadays, so they'll send you emails. They are very nice turnaround times just to ask how are things going, what you need to do. If they in the event of any questions, they'll ask you about it, and then finally they will pay if it is payable.
So you normally provide the bank details. So that creates confidence again to the employee, to the taxpayers. So you provide the bank details before you submit.
Okay. Thank you very much, Eric. Thank you very much, James. We are going to take a 5-minute break and then we'll be right back.
Hi, James.
I'm fine.
Can you please to the hot seat? I'm also fine. Thank you so much for asking.
Thank
All
you.
right, so obviously we ran payroll at Elevate HR and you're the payroll specialist. Would you just walk us through your journey of handling payroll for our clients?
Right. Yeah, we normally start with the onboarding process. There we normally sit down with the client, get to understand their need. Then after that, of course, we open them an account into our platform.
Yep. So what happens after you've opened an account for them and assigned an account executive for the clients?
Okay, this is a time now when we have all the information for this client, and now the next thing is to do the payroll for them. Of course, you understand the payroll process as 4 stages. That is the preparation, approval, disbursement, and ensuring that the filings and compliance are met on time. So we normally assist all the clients and ensure that disbursements are done on time, very accurate disbursements, and then filings. You see, by the law, there are due dates for filings of the taxes. So ensuring the filings are done and are completed on time without
what about
delay.
Reports?
After that, of course, we normally share the reports, the compliance reports with the clients for their bookkeeping.
All right, that sounds like a process that requires utmost precision. How do you ensure that the system and the process is as accurate as can be?
For us to ensure that the whole payroll process is smooth and without seams, we've employed Elevate HR software. Elevate HR software is mistake-free. It computes the payroll automatically and very accurate. Therefore, Elevate HR is the best software to use.
Wow, that sure sounds like a relief to both the employers and the employees. Like, we get to be paid on time.
Right.
And the process is error-free, like you've mentioned.
Exactly.
We understand the process of running payroll can be quite challenging. We're talking about time, costs, errors, compliance, you name it. And that's why we're here. Elevate HR is your partner when it comes to payroll outsourcing. Get in touch with us today.
Thank you very much, Elevate, for that informative video. So, James, I have a question for you in line with payroll and tax regulations. So, from your experience at Elevate HR as a payroll partner for different organizations, what are some of the penalties for non-compliance with payroll tax regulations, and how can organizations mitigate this risk as well?
Thank you, Janet, for that. I think this one has to be very detailed because it involves numbers. So
Yes.
I'll quote numbers when I'm just responding to this. So we can start with the first one. The first main statutory deduction being the pay as you earn for employees. There is normally the late filing. So Eric, you can bear me witness to this. The right filing and also the late payment. And again, there is an issue of failure to deduct. So you might end up not deducting, and KRA again get notices that you've not been deducting, and then they will visit you. So some of the percentages, or rather the numbers that are implicated here, when it comes to late filing for the case of pay as you earn, it's normally 25% of the amount that you are supposed to have filed, or 10,000, whichever higher. So, for instance, if the 25% is less than 10,000, so you get charged 10,000. So whichever is higher. So 25%, if 25% is more than 10,000, then you go with the 25%. That is what you get charged. Then when it comes to late payment, now you filed on time, yes, but again you've not paid on time. It's a challenge because the liquidity at some point affects most of the employers. So you find that you've not paid on time, but you filed on time. So it's good to file on time because the percentage is higher. But again, when it comes to payment, you should also ensure that you've paid on or before 9th of the month. That is for the case of pay as you earn. And also there is an interest. If you again don't pay on time for even more than 1 month, every month you get charged a 1% on the penalty. So you see, again, that's a lot. That's a lot of it's a cost, which again affects most of these employers. Failure to deduct is also 25%. If you don't deduct pay as you earn, or 10% or 10,000, sorry, whichever is higher. Same applies to that. So that is for the case of failure to deduct. So I can move to the next one, which is NSSF. So for the case of NSSF, you have to file and pay before 15th. If you don't file and pay, you get charged 5%. That is for the case of NSSF. For the case of NHIF, it's normally 9th of the month. And that one, the rate there is not that good, but it's five times. Kangosa, you can correct me on this. So it's 5 times the amount that you are supposed to have filed and paid. Because when it comes to insurance, you see there is an implication that. So you have to file and pay before the 9th of the following month. For you, so you see, as an employer, you also have to file for NITA, and you have to file for NITA, housing levy, and the withholding tax for those who are consultants or other contractors. So for the NITA is normally on 10th, before 10th, at 5% late filing and payment. So you can see all these are costs that again will be implicated on the side of the employer, not the employee, because it's a compliant issue to the employer. And then for the withholding tax, it's normally 5%. Failure to deduct is 10% for the withholding tax, but you have to do this on or before 20th of the following month. That is for the case of employer. Maybe to add on for the case of the individual income tax returns, because this is a month of filings. So guys are doing their filings for the case of individuals returns. That has to be done by 30th of this month. So you should ensure that by 30th of this June, you consult someone who is supposed, or rather who is able to file for you. The process number one, you have to ensure that you have the P9 from the employer. The employer has to provide that. So it's a responsibility of the employer to provide you with a P9 for you to be able to file. Other than that, as a consultant, you need to have the withholding certificates from the employer also. So, but again, whenever employer pays for your behalf, you normally get it on your email. So you need to have all that for you to be able to file. Late filing attracts 5%, 5%, or 2,000, whichever is higher. So for those who are filing nil returns, that's why you'll be charged 2,000 if you don't file on time. So if you an employee you don't file again, you get charged 5%, and a pen. That is it when it comes to the individual income tax returns. That is it, and also 5% for late payment. Yeah, yeah.
Okay. Thank you very much. Question to you, Eric. Is the one third rule still in place, considering that some tax reforms will further reduce the disposable income for employees?
Wow. That is a hot debate. Yeah. As per the Employment Act, the Employment Act says you should not deduct you should not deduct employees more than 2/3 of their income. That is there in the law. In terms of how the taxes are going to affect their third of basic rule, again, tax is supreme. Once it is signed into law, we may not have room to negotiate. And some of the repercussions is that sometimes you find that if the employee is a member of a SACCO, or the employee has some other deductions that are not statutory, some of these deductions are the ones that bear the cost of some of these things. But because both of them are the law, we may not be able to say this is not applicable and this is applicable. So most of the things that have suffered are some of these deductions, SACCO, maybe a loan, or some of these other third-party deductions that are not really statutory. But yes, it is a law. A third should be observed, and your auditors will be on your neck. If your auditors are very strict, they will be on your neck when you breach that law.
Yeah. And a follow-up question on this: does this apply to the gross or the net earnings of the employee?
The that of basic, it depends
Yeah.
again. Most different companies classify their pay differently. There are some who use consolidated pay, there are some who use basic pay, there are some who use gross pay. There are different terminologies to some of these things, but a practice that has been a third of your basic. There are some who use a third of their basic. There are some who use a third of your total pay. So it depends with how most companies structure their salaries. But I'm sure because James has dealt with a number of companies, probably he will be in a better position to tell us what has been his common practice. James?
Yeah, maybe to add on that, in most of the companies, you'll find it's a part of the basic, because the gross normally changes. You see, the gross might be carrying things to do with benefits that are not recurring every month. So it's normally, most of them, they will rely on the basic for them to at least have some allowance for deduction. So, yeah, yeah.
Okay, thank you very much. James, allow me to take you back to the components of taxable income. Are the unused leaves for a deceased staff taxable at the point of payment?
Sorry, the unused.
Yes, the unused leave days for a deceased staff, are they taxable at the point of payment?
Yeah, so you see, a deceased staff is not a disabled staff. So that case, it's a, so for a case of paid leave, yeah, for days that were not used, that amount is taxable. This is not
Yeah.
a disabled. Yeah, this is not a disabled staff.
Okay, thank you very much. Over to you, Eric. How should employers handle taxation for employees with irregular incomes?
Irregular income. um, According to the income tax, the threshold for taxable income is 24,000. That is the threshold of taxable income. So what that means is irregular income probably will mean I can look at it in two ways. One, I was in payroll this month. Next month I was not in payroll because probably I was earning commission and no retainer and stuff like that, isn't it? That is one
Yes.
way to look at it.
Yeah.
The second way to look at it is that it's my income is fluctuating from month to month. So today I have a bonus of 3 million. Tomorrow I have my basic pay of 15,000. So I will interpret that question in that manner. And there is no really a special rule on how to 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 manage fluctuating income. The thing is, because the payee bands are already given, they are defined. The Employment Act is explicit on which incomes are taxable. If in the month of June, for example, Eric gets a bonus of 10,000 or 50,000, I will apply it on the total income and apply the pay as it should be. In the event that for some whatever reasons I do not meet the threshold of the taxable income, so I just get my retainer of 15,000 or 10,000, which is below the taxable income, that one will not be subjected to tax. So it depends on how the monthly occurrence or recurrence of my pay. Thank you.
Thank you very much, Eric. I think I'm going to direct this question to James as a payroll expert. What are the best practices for payroll officer that a payroll officer can follow to manage these types of income correctly?
Me, I'll directly advise for automations, software automations. So you need to go for a software. If not a software, then you need to outsource your payroll. That is the best practice that you would adopt, because a software will always ensure that whichever amounts you feed in, it computes automatically what is supposed to be taxed, because they've already been coded to do that. So it's either you do a software or for you to get to just not to expose yourself to more risks, and
Okay.
let someone be accountable for that. So I think that is what I can advise to most of the employers.
Thank you. And I think Elevate HR is more than willing to be a partner in that. So I think in case you have anything you want to reach out to them about payroll, I think they are ready, more than ready to support you. So Eric, I'd like to direct this question to you. For people living with disability, does it mean that they are not taxed at all or they are taxed less?
Thank you for that question. I'm seeing actually. Thank you for that question. It's a good question.
Yes.
The law says that the first 150,000 is tax exempt for employees living with disability. An interesting, not really interesting, but something I learned recently is that even a bipolar condition that has been examined by a doctor and an individual is going through medication can be considered for a PWD case. So if it is diagnosed and the doctor gives a report, you can apply to the National Council of People Living with Disability and you get that. But the first 150,000 of income of PWD is tax exempt. Anything over and above 150,000 is taxable. I hope that clarifies the question.
Yes, I believe that clarifies it. So,
And just a
James,
comment. Sorry, Janet. Just a comment on the previous question. Sometimes you may realize that your software is not as good as what Elevate HR has. When you're processing fluctuating incomes, and KRA is very cognizant of that. And in their filing, in the event that your payroll person probably missed out an income from the previous month or the previous period. KRA is very aware of that, and in one of its filing schedule, it has an arrears column. There's an arrears column in the P10 where you can put in this figure, which was for a previous period. But again, most of the time, what payroll accountants do is to lump it up in the event that you missed something for last month. You can lump it up in this month's payroll and deduct the payee as per the law.
okay, thank you. And I think as we are speaking technology and compliance along software solutions, James, I'd like you to let us know how can modern software like offered, like the one you offer at Elevate HR, help organizations to stay compliant on tax regulations?
Okay, thank you for that question. I'll speak of four factors to consider there. One being the timely updates. You see, for softwares, for instance, Elevate HR is a cloud-based software, and it's used on a daily basis, 24/7. So we can't afford to be late when it comes to ensuring that we have updated our the rates or the new changes in the tax laws. So we have to ensure, for instance, a change in the SHIF. I'm assuring that by the third day of July, we shall have it very ready, because we have to ensure that we are timely, because the software is cloud based and someone might be running the payroll. So we ensure timely updates. That is one of that is one of the factors to consider, that it's a benefit to software users, or rather, when you embrace technology, that is what you enjoy. The other thing is automated tax calculations. You don't do it manually; they are already populated. What you just edit there is maybe the salary bit, allowances and deductions. The other bits, it's just automated. So calculations are automated. So also enjoy that. When it comes to detailed reporting, the software is able to generate reports that are very ready. For instance, let's say the P10. P10, will you pull it automatically the way it's required by the P10 that is populated from the iTax portal. So the software is able to give you a ready P10 for filing purposes, a ready NSSF template, a ready NHIF template. And in the P10, remember, the housing levy will already have populated inside that. So you get CSVs that once you import, they just pick into the P10 that you downloaded from the iTax portal. So you can see, like, your work is isn't. So like
Yeah.
you just flow. You avoid a lot of errors. So you exempt yourself from the manual bit. You don't edit figures, because that is what creates errors. The other thing is our softwares do give compliance alerts, like our software, for example. The new version, Elevate HR, gives very clear alerts when it comes to, like, it's a messaging module that will notify you as a user that these are the new rates for NSSF, for example, what happened in February this year. Clients could receive those alerts right from you don't have to like get confused, look from the blogs. You see, some people do write blogs, but again, the rates have not been implemented yet. So we normally ensure that we are up to date on that. Things to do with data security and integration, being able to integrate with any other HR system that you have in your organization. So I think to ensure compliance, you require software like Elevate HR, because you'll enjoy all that. You get out of the manual, but again, Elevate HR will also assist you in payroll outsourcing. Just give us the entire payroll function. Yeah, that end, then you are sorted. Yeah.
Wow, that's outstanding. I think you don't need a platform like Elevate HR. You need Elevate HR itself. So over to you, Eric. We have a question. What is classified as a person living with disability?
What is classified as a person living with disability?
Yes.
Again, according to the law, a person living. Do I have the correct terms really to define this from a law perspective? But let me give it a payroll or a layman interpretation, because I've not really delved into the legal definition of what a PWD is. But from a layman perspective, a person living with a disability is someone who is able differently. Let me use able differently. For example, someone on a wheelchair, someone who has issue with the sight, someone who has issue with the ears, someone who is paralleled in one way or the other, someone who has a condition that the law considers to be abled differently. So that whole bracket of people, and there's a group, there's a legal body called the National Council of People Living with Disabilities, who govern what condition is considered as a PWD, and they work closely with the KRA so that they know which condition is considered as a PWD and which condition is not considered. I hope I've answered the question.
Yes, I believe you have. Thank you very much for that. Over to you, James. If an employee applies for a personal pension, does that attract tax exemptions?
Yeah, personal pension, that is what is normally combined with the NSSF because the NSSF is also a pension. So
Mm-hmm.
personal pension, you have to have that documentation to prove that you are, yeah. So again, it's unallowable, so it's exempted, but to a limit of not more than 20,000
Okay.
combined with NSSF, yeah.
Thank you. Eric, what are some of the advantages of outsourcing payroll functions to a specialized provider like Elevate HR?
I have had the privilege of running both payrolls. I've had the privilege of working with an outsourced payroll. I've had the privilege of working with a full in-house payroll processing. And on a large scale of things, it's mostly a management decision. But the advantages that I found personally when working with an outsourced payroll is basically what James has said: the headache of accuracy. You know, when you get James, let me put James in the spot here. When you get James to run your payroll, you sign a contract. And one of the clauses of that contract is to tell them that in the event that there's any error in terms of pay computation, in terms of compliance, in terms of anything, you guys will pay. So that removes that headache, complete headache of you wondering, is my payee computed accurately? Because you already have a contract, and one of the clauses of that contract is you're telling a little bit chap, in the event that KRA comes and does an audit to us and finds that we paid or underpaid any tax upon your advice, you are the ones who are going to be liable. So, and then the entire headache for you to run a payroll, you may need like 3 or 4 or 5 people
Yeah, yeah,
because
true.
there's someone who has to do an input, there's someone who has to review, there's someone who has to check, there's someone who has to elevator systems or an outsourced payroll. The salary that you pay those 5 people, it's not even equivalent to what you'll pay, let's say, elevator charge, for example, because the cost of consultancy for an outsourced payroll is way much less. And then the other thing is because most outsourced payroll, the systems that outsourced payroll use are that is their day-to-day business. So they invest a lot of time in coming up with systems that are efficient. So what you'll find that even in your reporting, for those of us who are in analytics, HR analytics and reporting, just to look at the cost per head, return on investment per head, vacation cost per head, and how they play around with the departmental cost and blah blah blah. Some of the things that an outsourced payroll is the ability to give you a summarized report on anything you want. You just tell James, I need a customized report showing 1, 2, 3, 4, 5, and I need it to come with some margins and put this column. James will configure that into your system, and at the end of the day, he will send you that report because that is their key, that is their day-to-day work. If you leave it to an in-house person, we will struggle a bit. Some of us in HR, not me, struggle a lot with Excel. So we may struggle a bit with Excel. But an outsourced payroll will allow you to give you all those reports at a click of a button. So those are some of the benefits.
Thank you very much, James and Eric. I see time is not on our side, so I'll give it over to you to give us the final remarks. And yeah.
So
All
final
right.
remarks for me.
I think I can start. Oh, sorry.
Okay. Proceed, James.
Okay. So I think to the let's start to the employers. To the employers, you guys need to come for Elevate HR for payroll outsourcing and software also. We're going to give you that service. Again, for the employers to the employees, then they have to issue P9 forms because it's a pay. It's actually it is a compliance month. By 30th, which is nearing, all employees should have filed their annual tax returns, and that one they only require the P9 forms. Elevate HR normally generates them automatically from the software for the entire year. So the year we blind year is the year 2020-2023. And also again they need to conduct some trainings when it comes to filings, and also they should check, they should perform a compliance check to the employees. I think that's a way of assisting the employees that for them to be compliant when it comes to their matters. And then to the individuals, so you guys, for those who are filing their the ITR, they need to just proceed right away. If you're facing a problem, please do not afford to not to reach out to a consultant or rather someone who is used to the processes, and they will file on your behalf. We are also here. Eric is here. James is here for that work. So don't panic. It's a month for compliance. So guys, all the best.
Yeah, thank you very much, James. From a conclusion point of view, number one, being in HR, we are moving into data HR, and one of the biggest causes or sources of data in HR is payroll and costs and compensation rewards. They form a huge chunk of our data analytics from a HR perspective, and so one thing that we can never emphasize enough is accuracy of HR data, especially from a payroll perspective. KRA is not very friendly when it comes to penalties. In fact, they are levied automatically. There's no discussion about it. And the nature of our tax regime is you pay first. Once you pay, then we come on the table to discuss. For us to get rid of all these processes, it will be very prudent for us from a finance, a payroll, a management point of view to ensure that our systems are as efficient as possible. And so that means is at the end of the day, ensure that you have a very competent person who is running that payroll. But if you think that headache is too much for you, you may be free to outsource. And finally, I repeat, consistently have your legal team, have your payroll consultants, have your KRA contact to consistently update you on some of these things so that you are not caught unawares, because the law does not, there is no unawares in the law. Thank you very much and have a nice evening. Thank you very much for this time.
Thank you, Eric. Thank you, James. And thank you, everyone, for tuning in to this discussion. It was a lovely discussion. We are running out of time, so we'll not be able to answer all the questions at the moment, but we have a link that has been shared in the chat box. So we'll be able to do a one-on-one for anyone who has questions about the payrolls, how we can be compliant, and even on the outsourcing service that Elevate HR offers. And I'd like to give it back to Pili. Thank you and have a lovely evening.
Oh, well, thank you, Janet. That was excellent moderation. Thank you, Kagose and James. You guys are always amazing. We had such a fun time. I had such an amazing time switching through LinkedIn and YouTube, just reading some of your comments. I know LinkedIn was quite engaging. In fact, I was just laughing out loud at Leah's comment. She said, "Shh, please whisper, otherwise all Gen Z will apply for bipolar tax exemption." We also had so many comments from, let me just Kavo Mutua, Alfred, Juliet McKenna. So thank you so much for an engaging session. I think one thing we can all agree is that compliance errors are absolutely costly. Like James has said, it will be prudent or best place to just handle that headache, give that headache to a company like Elevate HR, like what we do, so that we can take care of that. So if you're looking again for a payroll outsourcing partner or a payroll software provider, look no further, we are here. If you're a HR professional and you're looking for a community of like-minded HR professionals, consider joining the community. As a matter of fact, some of these conversations and the questions that have not been tackled here will be, it's a conversation we will carry on to Slack. So we will ensure that at least all the questions that you have are answered. So otherwise, thank you so much for tuning in. Till next time. Bye.